Hello. Welcome back, everyone, to Alpha Beta Soup. I'm TXMC. There's a lot going on in the news cycle right now. We'll look at the Bitcoin price chart. We'll talk about what's going on over there. We'll look at some commodities prices. Right now, I've got oil on my screen as it shoots up to $125 a barrel. We'll also take a look at some of Bitcoin's on-chain supply dynamics and what I think it means for that asset over the next few months. But this video will be a little bit far-ranging as we've got a few different topics to discuss and try to bring together. I owe you guys an apology because my release schedule has been very inconsistent of late. I am working on a way to be more consistent in that regard, and it's a work in progress. I'm still figuring it out as I go. But I am still here, we are still making videos, and we've got some things to talk about today. If you enjoy my content, make sure to give my video a thumbs up and subscribe to my channel. But I won't keep you guys waiting any longer. You've waited for me long enough. Let's talk about Bitcoin. Well, here's our price chart, friends. We're still very much range bound where we have been. Bitcoin is still trapped between 35 and 45,000 in a small range inside of a larger range. Now, price has just continued to ignore 40,000 over and over again, bouncing above and below it, completely disrespecting it. I think in the short term, it's impossible to talk about direction for Bitcoin until 40K is reclaimed with strength. It's a big psychological number. It also represents an important oscillation point for price action over the past year. So let's get back over 40,000 before we start talking about relief rallies. Because in the meantime, price is still very much inside of a tiny range in a larger range. And price, for its part, is on the lower half of this range. I think it's still very possible that we visit the low 30s here, especially with what's going on in the world, with all the various actions being taken by different governments. I think at any moment, we might get a news item that could send assets plummeting. And if that's the case, 30,000 becomes very enticing. But from a technical perspective, Bitcoin did set a higher low here at the end of February, so that is a positive. But as we mentioned, getting back over 40K with strength is the first step before we can talk about what we think the next rally or the next move might look like. And right now, my base case is still very much we are in this range, and we probably will stay in it for the next few months. Now, something else we had been watching over the last few weeks was this fractal taken from the 2018 bear market right here. See, here's the 2018 top, and we've been following this fractal for the last 6 months. We've talked about how eerie it is for price to follow a fractal for this long. It just never happens. But this was absolutely eerie. And what I think we can safely say now is that we have deviated away from it in a meaningful way. It's the first time since this fractal began that we've actually gone in a different direction from the fractal. So right now, I say we can put this fractal to bed. It looks like it has been officially deviated from, and Bitcoin can now create its own history in 2022, no longer tethered to price action of the past. So 2018 Crash Fractal, officially dead. And from a drawdown perspective, Bitcoin is holding support right here at the 786 drawdown, which is about 37,400. So it's nice to see a bit of technical confluence happening here as we're setting these higher lows and bouncing around 40K. I wouldn't want to see price get down here and start dancing around in these levels because this is no man's land. Let's see it hold this spot right here. That's what everyone wants, and then we can look for it to reclaim 40K and then move on. But until we start to see this movement here, the lower part of the range is very much in play, and I don't think we can put this out of our minds just yet. Now, as I sit here filming this morning, I see news that the U.S. has decided to ban Russian oil imports. And what do you know? Crude oil is pumping, now back up to $125 a barrel. This is very concerning. Oil runs the entire global economy. It is the fuel for everything. Petroleum is the basis of so many products and derivative products that the price of oil itself is a linchpin of the global economy. Seeing it at $125 a barrel is not good and will have far-reaching effects. But even more than oil, I'm concerned about the commodity market broadly. So I just showed you oil spiking up to $125 a barrel. Here are 8 more commodities, all seeing similarly aggressive price movements. From the top left, we've got copper, aluminum, nickel, European natural gas, palladium, corn, wheat, and soybeans. Now, Russia and Ukraine combined are 2 of the world's major producers of most of these items, and they're now at war with each other. And when commodity prices go up, the entire global economy is affected because these are the materials we use to produce everything, to produce perishable and non-perishable foods, to produce car parts, home repair items, electrical components, all manner of consumer goods, all use these commodities. European natural gas, just on its own, is up over 5,000% from the lows in 2020. Look, here it is, around $4 in May of 2020, and now it's at $227, 5,800% rise. This is the commodity people in Europe use to heat and power their homes, and it's up 5,000% in 2 years. Now, the entire commodity market has had the groundwork laid for a supply shock for the last 2 years. Disruptions to global supply chains have caused this environment we find ourselves in. But Russia invading Ukraine sent it into warp speed. And when we have rising material costs, the second and third order effects on the global economy are catastrophic. 3 of these commodities in particular have my eye: nickel, crude oil, and wheat. Shown here at the top, see all 3 of them spiking up together. Well, when these 3 commodities, which are 3 of the most important ones, all spike at the same time, it has a precedent for bad reactions. The last time nickel, crude oil, and wheat were all rising with the same level of aggression was the beginning of the great financial crisis. Now, we have a different cocktail of factors weighing on the economy now, but rising cost of materials always has the same effect, and it causes all prices to rise. Basic economics dictate that all costs are ultimately passed along to the consumer. And when the material costs to produce our goods and our energy and our food, those baseline items are rising in price, all costs rise. And this is coming on the heels of already record inflation. Last month's CPI headline print was 7.5%. And this week, on Thursday, March 10th, we get another CPI report and a new inflation print. Many consensus estimates think we may see 7.8 or 7.9% inflation, up from February's report. That's nearly 8% headline inflation on a doctored basket of goods. We know the actual inflation number is likely well into the double digits because the way CPI is calculated, it disregards some fundamental necessities. So we've got record inflation, record debt to GDP levels, record leverage and margin debt in equities. All of these things are happening while the commodity market is seeing a historical price boom. This is not a good mixture of ingredients for the global economy for the next 6 to 12 months at all. And so it gives me a lot of pause, and it makes me hesitant to project bullishness onto Bitcoin because I see everything going on around it. It makes me very concerned. So I'm not saying that we are heading for the great financial crisis. There was a lot that caused us to enter a recession at this point, but a commodity boom didn't help, and we are currently experiencing one of those. So be cautious. This will not simply go away. But for Bitcoin's part, in some ways, I feel like it was made for these moments. It's just that the world hasn't yet woken up to its potential as a censorship-resistant, long-term store of value that is incorruptible, because that is what it is. It is an unwavering monetary protocol. And unfortunately, the majority of investors still see it as a risk asset, so it trades like one. But I believe we're seeing a very strong advertisement for its adoption happening on the world stage. When we see what's happening north of our borders in Canada with people's assets being frozen for participating in a protest, when we see Russia's foreign exchange reserves being locked globally by central banks, preventing them from accessing money they believed was theirs. and when we see monetary mismanagement, and when we see the destruction of buying power for the working classes while we head into a commodity boom, which will further strain costs, all of these are epic advertisements for Bitcoin as a long-term wealth storage mechanism. I think if we continue to see actions like this, if the last year or two are a sign of what the next few years will look like, I think adoption for Bitcoin could accelerate dramatically. We're probably a few years, a couple of market cycles away from Bitcoin performing differently under duress, but I do think we will get there. So we've discussed on this channel at length how the bear market for Bitcoin almost began months before price rolled over in early 2021. January and February was the height of market activity, shown here as active addresses and transaction counts, both of them peaking in January of 2021. And Bitcoin, for its part, went through a full capitulative phase and has since bounced back up and is kind of hanging out sideways in terms of network activity. The number of active addresses has kind of stabilized in this 900,000 to 1 million zone right here. And transaction counts have also stabilized in a zone for the last few months. Yes, there is some decline and some volatility, but general trend is that it is in a stable zone. We're no longer in the decline we were in the middle of 2021, and we're not rising like we were from July up through October. We've stabilized. When we come to look at loss realization on chain, we can see that there are still moments of loss and profit realization, but it's chopping around. They keep trading places to which one is being more dominant. And you can see by the way this ribbon is printing and going away, printing and going away. There's a lot of oscillation here, partially due to the price chop, but also due to behavioral dynamics underneath the hood. And this activity, the way we're chopping around between profit and loss, is very reminiscent of the middle of a bear market. So keep in mind the inconsistency of this loss ribbon up here as I pull us back into a previous bear market. So here we are looking at the bear market after the 2018 peak. And as you can see, loss realization and profit realization took turns over and over again until the market found its equilibrium. Now, we all know there was a precipitous fall in late 2018 that was accompanied by a fall in the equities market. So let's just ignore this for right now and focus on this part right here. You see this chop? This chop looks a lot like what we're experiencing right now, where we go through phases of profit and loss realization up and down, chopping in and out, and churning investors. But you can also see that as price calms down, the oscillation and the peaks of these values also tend to calm down. And I feel like we're in one of these phases right here, where we're seeing decelerating loss, also decelerating profits. And we may just hang out in this kind of a zone for a while in terms of the behavior of this metric. So bringing it back here into the future, again, we see this kind of chopping around here. We did get a big peak of loss realization in February when we had this capitulation down to 33K. But since then, just more chop. And I think we may be in store for more of that. And what we're looking at here is the distribution of all Bitcoin by the price it last moved. This chart comes from a website called chainexposed.com. You see the logo right here? This is run by another analyst called Bull from the Sea. And this guy is brilliant. He pulls all his own data from his own node and he produces these visualizations with it. Great website with a lot of really cool charts. And what this current one is showing is the distribution of Bitcoin, but I have filtered out coins that have moved in the last 3 months. So we're basically looking at the distribution of Bitcoin before 2022. The colors represent age bands. This orange here represents coins that are between 3 months to 140 days old. Now, 140 days ago was October 19th, the day before the futures ETF launched, and 2 days before we hit new all-time highs. These coins here on these orange bars represent new hodlers. These people held from the top, and they have not relinquished their Bitcoin. They have not spent it at all since we reached the all-time high in November. These represent the new diamond hands. And when I look at a percentage of long-term holder supply above 50,000, About 10% of all long-term holders are currently holding Bitcoin above 50,000. And if you just think about everything that these hodlers have been through in the last few months, for them to still be holding on demonstrates a severe strength, a confidence in Bitcoin, an unwillingness to buy dollars. Because that's what you're doing when you sell Bitcoin. You are selling Bitcoin and buying US dollars, or your currency of choice. And these hodlers here bought the top and have decided to stay in Bitcoin. And I think that this demonstrates the new class of hodlers and the things that they're willing to sit through, willing to endure, not to be parted with their Bitcoin. So I get some confidence from looking at this visualization here. And it also demonstrates that we have a considerable amount of supply that is sitting above current price, because current price is down here, right? We're around 38,000, 39,000 right now. And if we look at the percentage of total supply from where we are, there's about 34% of Bitcoin sitting above where we are right now. About a third of the entirety of all circulating supply has a higher cost basis than today's price. And many of these people have been holding for months. Remember, none of these bars right here are anyone that's moved coins in the last 3 months. These are all from last year. So all these people here, above 40, above 50K, have weathered a massive shitstorm of FUD, and yet they've held firm. So if you are someone feeling uncertain about what's going on in the macro picture, if you're not really sure what other Bitcoiners are doing right now, this chart in a way is showing you that. It's showing you that they're not really spending it. They're sitting on top of coin that they've been sitting on for many months now, some of them 6 months to a year. So we've got stout supply dynamics. We have hodlers continuing to hold coin from the all-time highs, despite Russia invading Ukraine, despite an historic commodities boom, despite inflation fears, all of these things going on, and we've still got hodlers hodling. We also noted that activity for Bitcoin rose in the rally up to October, November, but hasn't declined in the typical bear market sense, but has instead kind of gone sideways. So in a way, we could say Bitcoin went through its bear. It's almost like we're multiple months into our bear cycle already. We just happened to get an anomalous all-time high in the middle of it, largely due to a lack of spending. But as we talked about, until price gets back over 40,000, there isn't a lot to really look at in terms of micro trend, in terms of short-term direction. We could go look at the derivatives market, look at funding rates, see how much open interest there is. But in total honesty, friends, I don't think that those are going to provide signal for us today at this moment in time. What will provide signal is what is happening in the news, unfortunately. The CPI print is in 2 days. President Biden is looking to pass some kind of executive order encouraging crackdowns on the cryptocurrency industry broadly. And we're waiting to see what happens with commodity prices. All this stuff is going on, and then next week, March 15th and 16th, Jerome Powell and the Federal Reserve have another meeting, in which point they are likely to kick off a series of rate hikes. This is the time in the market that we've been waiting for the last couple of months to get to see what the Fed was going to do and how the market would react to those things. We didn't know that Russia and Ukraine would start a war in that time. That is a new ingredient thrown in the pot for us to consider. And while Bitcoin is setting higher lows and is still structurally sound and intact, we're at the lower end of a large price range, and we are currently directionless. So despite stout supply dynamics, the macro stage is making me feel very uncertain. So what I'm going to be watching over the next couple of days is to watch for the CPI print. I'm going to continue to watch Western markets and see if they sell off any more, because if they do, Bitcoin may go with them. But the way that it's holding up here makes me think that maybe Bitcoin is in wait and see mode. So while Bitcoin did set higher lows and it is still structurally intact, we need to get back over 40,000 before we can start feeling like there's any directional bias being established. This is the time when investors should be accumulating assets they believe in, that they have a long-term thesis in. For me, this is not financial advice for you. I'm not a financial planner. I'm not qualified to give you any advice at all. But the way that I see the current time is this is a time to be stacking and preserving capital on the sidelines for a bigger move. I don't know if we'll get one. I don't know if we will flush down to 30K. I have no idea what's going to happen. But I do know that we're 40% down from the all-time highs, and this is usually a place that you want to be accumulating for the next run. So that's what I wanted to talk about today. The boom in the commodities market is making me very apprehensive about the health of the global economy over the next few months. But I think that Bitcoin, having already gone through the dramatic capitulative phase of its bear market, I think for the most part is kind of in sideways accumulation mode here. Now, if we run into a recession sparked by a commodities boom, if inflation continues running out of control, Bitcoin will probably eat shit like the rest of the market. But those tight supply dynamics that we talk about make it very well positioned to react the next time the market is ready to have positive price action. We've just got to hold tight and allow the storm to circulate and clear itself. Western leaders are doing a great job advertising the use case for a censorship-resistant monetary asset like Bitcoin. We're probably a couple of broad market cycles away from it being seen as a risk-off asset and behaving more like one. So in the short term, expect a lot of volatility, expect a high beta correlation to Western equities, and if you're a long-term stacker like me, these low prices are a discount. Make sure you're following me on Twitter at TXMC Trades. It's where I post a lot of my thoughts and analysis, and it's a great place to interact with me and ask questions. I've been posting less on-chain data of late because there has been less on-chain signal of late. Some people ask me why I'm not constantly posting updates to things like short-term holder cost basis and this and that. It's because in a lot of ways, those metrics are not producing any kind of signal right now. The whole world is watching Ukraine and is watching the Federal Reserve. And when the metrics start moving again, we'll start talking about them again. But I don't think that sitting here and looking at illiquid supply at a time like this is going to bring us much value. But that's it. I've been ranting. I've told you what I've been thinking about. I am concerned about the commodities market and the far-reaching effects that the rising cost of materials will have on the global economy. Prepare yourselves accordingly. I've been inconsistent with my video schedule lately, and I owe you guys an apology for that. I'm trying to figure out a way to be more consistent with this channel. It's a work in progress, and I'm continuing to grind away at it. If you guys have any feedback for me, any questions or comments, leave them down below, and I will respond to them. We will talk later this week after we find out what the CPI print comes out at and how the markets react to it. If it comes in under expectations, we may get a short-term pump. There's a lot of money on the sidelines waiting for any reason at all to take action, to take on risk. But the global environment is not encouraging that kind of behavior right now. These periods don't last forever, and it's important not to get wrapped up in the emotions of the news cycle. But that's it. I've been talking for long enough. I'll let you guys go. Until we speak again, take care of yourselves, friends. Be kind to each other, and we will chat in a couple of days, I promise. Cheers.